So welcome back to the Financial Bites podcast. I'm your host, Chris Passmore. I'm your social media CPA. And today I am so excited to geek out about financial planning analysis with our guest, Mark Wald. Mark Wald is the Managing Director of Supporting Strategies, a nationwide provider of outsourced bookkeeping and controller services. So Mark, welcome to the show.
Thank you, Chris. Glad to be here.
So as I mentioned, this is our moment to geek out because I truly believe that financial planning and analysis can be an invaluable tool to our clients. And I know that you've got a similar passion for value-added reporting, for financial modeling and data analytics. So tell the audience, tell us a little bit more about you. How did you get into this line of work and what type of projects are you working on these days?
Sure. Well, I grew up in Silicon Valley. My father's an electronic engineer. My mom was an MBA, like office manager, marketing director, just get stuff done. Don't waste time. So I kind of inherited the best of those traits, the curiosity and problem solving mindset and the hustle to work 18-hour days and power through. And I brought all that with me through I studied undergraduate at UCLA in economics. My first job out of college was at a business bank. And so I sat down in the accounting department going through debits and credits. And at that time, we had little paper slips we had to fill out to get transactions processed in the bank. And I got bored to tears pretty quickly. So I found a book on my CFO's desk that was a kind of Excel how-to book. I read it front to back and tried every formula in the book. And I learned how to automate my mundane tasks and responsibilities, started running around the bank, teaching everybody else, you could do this faster this way. Instead of writing that paper slip, fill out this spreadsheet, and then it'll automatically do these other things. Some people got unhappy, but I was very fulfilled. And that set me loose on the financial planning and analysis track, playing with numbers and data in spreadsheets versus posting debits and credits in the accounting software. And then I went on to work for like movie studios and large enterprises and got into systems design and implementation. And I really like the business process and analysis and insights a lot more than, reconciling a balance sheet myself.
So to go back to the beginning of your career, you were literally filling out pieces of paper to process transactions, and you saw the inefficiencies, and that propelled you today. It's so funny to think back about, 16 column paper and everything we had to use back in the day, punch forms and Scantrons, huh?
The bank literally had, like, in the basement, a bunch of machines that like scan check size pieces of paper and checks, and they had like anywhere from 5 to 10 human beings working overnight, just keying those things in, like as fast as their fingers could move. And I was like, why are we like typing up things and printing them out and cutting them down to size, sending them to the basement for someone else to type them back up again in the machine? Or writing them by hand and having someone squint and get it wrong. And then tomorrow morning, we have to find their error, correct it, and put another slip of paper downstairs. So that drives me nuts. I need to do it faster, better, cheaper.
Yeah. Well, and so as this relates to our clients, and I'd like to say our clients are primarily, small and middle market companies. I see tremendous value in financial analysis, financial modeling. But let's take a quick step back. Maybe for our listeners, can you share a little bit, what's the difference in your eyes between accounting and financial planning and analysis, or FP&A? I mean, they're vastly different things, right?
Right. Well, accounting and FP&A go hand in hand. While accountants record the historical financial activities of a business looking backwards, FP&A analyzes those results. FP&A, I should say, financial planning and analysis. So accounting is looking backwards, keeping score. Financial planning and analysis is analyzing those results to gain insights about how the business is performing, and then use those insights to plan for the future.
I once heard the metaphor from a dear friend. He said, if you think about accounting and bookkeeping like a car, the accounting is the rear view mirror. The financial planning and analysis is the windshield. And I thought that was such a clever way to think about it, that accounting and bookkeeping is telling you how you did in the past, where financial planning and analysis is really based on on where you're going in the future.
That's right. And you have to be able to see in the rearview mirror and see through the windshield to know what's happening around you. It's a good analogy. There's tons of analogies for FP&A work. And planning is just another word for budgeting or forecasting. And you can't really measure and achieve success if you don't know what your plan is to begin with.
Yeah. So let's talk about this for middle market and smaller companies. I mean, where do you think FP&A can really play a critical role for let's say a company that might have, 5 to 10 million in revenue? Chances are they've got one primary accountant who does everything, including office management and facilities. How can FP&A benefit those types of companies? And what have you seen with your clients?
Great questions. So first, I'll say it sometimes takes a different mindset to do the planning and analysis than to do the scorekeeping. I, for one, would be bored to tears if I had to just punch numbers all day to keep score for how the business is performing and then do it all again the next day. But there's some people who really enjoy an honest day's work, and like when they get everything to balance at the end of the day with no errors, that is success to them. For me, success is taking those results, studying them, and slicing and dicing them different ways to understand what do they really mean and how can the business do better in the future with this new information. So it's a different mindset to do the analytical work. An acronym I think your listeners, some of them are probably familiar with already, is KPI, which stands for Key Performance Indicator. So part of the initial analytical process is taking the business apart, understanding all the different individual components and activities, and identifying which are the key performance indicators that really move the needle. And that's where you start with your planning and strategizing for the business, because you want to understand what do you expect those KPIs to look like as the business is performing well and growing into the future. And then you can measure against those and understand any variances that are happening day to day and course correct. If you don't know what your KPIs are, then you don't really know what you're targeting and what your goals are.
So could you maybe give us an example of some KPIs that you've identified with some of your clients? It could be any industry, whatever you think makes sense. But like here's 3 KPIs that I'm working on with a client right now.
Sure. Well, in e-commerce business, some easy KPIs are like a cost per click, cost per acquisition, which is how much does it cost you to get someone to click through and visit your e-commerce store. And then an acquisition is like when they become an actual customer. If you say for every 100 people that click through, one of them buys something, then you add up the cost per click for those 100 people, and then they turn into one purchase. So that entire cost is your cost per acquisition. And then an average order value would be like, on average, how much does each customer purchase when they buy something? Then, for the same e-commerce business, some customers will come back and buy more again and again in the future. And you can extrapolate out and understand what is the lifetime value of that customer. How much on average does each customer spend over a long time period with your company? And that will inform how much you're able to budget for the marketing to acquire those customers. Because if you're going to spend, let's say, just for easy math, $1 per click, which is a lot of money per click, by the way, and then every 100 clicks turns into one customer. If that customer buys a product for $20, you're losing money because you're spending $100 to get them to buy a product for $20. But if they're going to buy the same product or value every month for 3 years, now you've got, a whole lot more revenue and profit to justify that $100 spend on the front end. So those metrics kind of play hand in hand together, and you can build a forecast model that extrapolates and projects what would happen if we spent more on marketing today to get those kind of customers to come to the website and to interact. The same relative metrics are true for like a software subscription type service. And you can really take it all the way to strategy. So businesses that are doing $5 to $10 million a year in revenue are at the point where banks are likely to be willing to lend to them. And the company might say, well, we only have $50,000 of available cash that we could spend on marketing right now. But gosh, if we could spend $250,000 or $1 million on marketing, we could get a whole lot more customers and make more profit in total. But it's going to take us 3 months or 6 months or a year to earn that profit back. And so we can't spend more than 50 grand today. But if you could borrow money from a bank or another lender, and the interest expense on that debt is less than the profit that you'd make on those new sales, then that's a growth strategy to accelerate your business forward faster. So that's an example of how you can use FP&A to really impact the bottom line of the business.
Yeah. And so be honest with us. So when you get engaged to help a client with this, typically how many of your clients actually have KPIs already? Or do they look at you like, what's a KPI?
Yeah, it's a sliding scale. I mean, we work with some pre-revenue startups as well as small businesses doing 5, 10, some of them 10, 20, or even $100 million a year in revenue. So the more mature companies, they understand what KPIs are, but they may still not have the resources to really dial it in. Mm-hmm. I guess maybe 50-50, we'll say. 50-50. Yeah. And the KPIs may change as the business evolves because you get into new products, new markets, and new ways of doing business, and certain KPIs become more relevant than others.
So focusing on the small and middle market, you mentioned a couple minutes ago how it's a change of mindset, or it's a different mindset than just your traditional accounting manager, senior accountant type folks. So how can a small and middle market company have the resources available to do the FP&A? Because likely the person they have is a wonderful bookkeeper, maybe is great with QuickBooks, but doesn't have that mindset that you mentioned.
That's right. Or maybe that person does have the mindset and would be capable of delivering great insights, but they don't have the time because they're busy in the weeds doing the day-to-day accounting work. So in either case, outsourcing is a great solution because you can hire in consultants that have done this for dozens or hundreds of other companies before and can shortcut the path to get you to really valuable insights and how to apply those to grow the business. If you hire in an FP&A consultant or a fractional CFO, for example, or you can hire in the bookkeeping support to keep track of the scorekeeping day to day and free up your internal resources time to do more of the analysis. So it really depends on who you have in place and how complex each function needs to be that determines what your best course of action is.
Okay. And so this might be a loaded question or a softball. There's at least I've heard this from more of my clients that, FP&A planning analysis is only needed for companies who aren't doing well. I'm doing fine. I've got tons of money in the bank. What do you think about that statement, that FP&A is only for those who are on desperate times?
I think obviously it's wrong. Blockbuster Video thought that mail order DVDs and streaming video was only for, weirdos. And they were very wrong about that too. I think every business, most businesses have competition in place, right? And the landscape changes, the customers and the expectations change over time. And if you're not analyzing and doing something about optimizing your business, you're likely going to get left behind. You're going to have, even if you have good profits coming to the bottom line, let's say, I'll give you a good case study. I worked for about 3 years with my team for an on-demand delivery service business, kind of like Uber for fill in the blank. And they were rolling out across the country very quickly, opening up new markets, hiring staff, doing lots of marketing in each new major city around the country. And they were spending tons of money in each new market to educate the consumers about what was available to them and to incentivize the drivers to come work for the company and train them and set up the infrastructure. And what we started tracking for them was we tracked their accounting activity. See, FP&A informs the accounting. It's a cycle. And so we looked at the data in aggregate and we said, wow, you're spending gobs of money here, and we don't really know how effective every dollar is. So let's slice and dice it by geography. And the money that's spent in Chicago on these different functions, let's compare that to how many customers are being acquired in Chicago and how many dollars those customers are spending on the service, and are we getting a good return on that investment, and separate that from the dollars spent in Los Angeles and in New York and in these other markets. And what we found, not unsurprisingly, is that there were some markets that were drastically underperforming the expected results and other markets that were outperforming the expected results. And when you put it all together and just look at everything in one big mush pot, you see $1 million of marketing spend and a few other things here, and we have 5% profit at the bottom line. And you're like, okay, 5%, that's better than zero. Let's just throw another $1 million at it and see if we can move the needle and get double the profit or increase the margins. But when you slice it up into different markets, you can immediately see, well, 3/4 of the profit is coming from this one market right here, and these other 3 markets are losing money. No matter how much we spend there, the customers aren't engaging and they're not giving us a return on that investment. So we either need to do something differently there or shut it down. And by shutting it down, you actually can cut costs by 50%, let's say in that example, and bring more profit to the bottom line, even though you're reducing revenue.
So in this example, you actually found a way to, let's say, reduce the size of a company, maybe make it less complex with less geographical areas, but have more income at the end of the day?
Yeah, you can have lower income at the end of the day, but higher profits. So you can actually cut, same thing with products. If you're selling products in different ways or professional services, you can give away, you see a lot of businesses, like large corporations, they have divestitures where they spin off a particular business line that's just not working well within their enterprise ecosystem. Oftentimes they do that because that enterprise is losing money and it's dead weight that's dragging the business down. But the only way to know that is if you're using FP&A to segregate and analyze the performance of that particular product or service apart from the rest. You can do the same thing with clients. We're professional accountants, so we work with a number of different businesses. And if you're looking at how much money you're earning from each company, each client, compared to how much money you're spending with each client, then just on a dollars and cents basis, you can see which clients are more profitable than others. Architects are notorious for not understanding their profit margins by customer or project. And they may have some projects that they're making very respectable 40, 50, 60% profit margins on, and other projects where they might be losing money. And when you learn about how the business is performing, then you're armed with the information to do something about it. And oftentimes the do something about it isn't shut that business down, but it might be price it differently. Be more realistic about how much time and expense does it take you to achieve success in your business, and then increase your prices to support that effort.
So this is then a challenge to all the listeners in the audience. If you have a business and you can't point to your 5 most profitable clients or least profitable clients, then maybe you need some help here. Sure, you can probably point to your 5 largest clients, but I didn't say largest, I said profitable. So if you can't answer that question, then maybe you need someone like Mark and Mark's team to help you evaluate that, because I can tell you firsthand, I've done that analysis for my company. And it's amazing when you actually analyze profit that you have projects and clients that are unprofitable. And it's not until you look at each one individually, not the whole, that you actually identify those and realize I could be better off by, let's just be honest, working less.
That's right. Working smarter, not harder. And it's not just clients. It could be products. It could be sales channels. Back to e-commerce, there's Shopify and WooCommerce and Magento and these kind of do-it-yourself e-commerce platforms. There's also marketplaces like Amazon and Walmart.com and eBay. And there's different fee structures and different pricing strategies on the different channels. There's also wholesale, where you can sell to somebody else that's a distributor or another store that's going to resell products. And you need to understand your profit margins between them, how the marketing dollars translate into sales. And with businesses that start off selling direct to consumer, and then they gain some momentum and they start selling to a wholesale distributor or a reseller, their profit margins take a hit, which isn't necessarily a bad thing, because you might sell this football right here for $1 to your customers, and maybe it only costs you 25 cents to make, and you make a really good profit margin on it. But if I want to sell this football through Amazon or through Target in their stores, Amazon and Target may only want to buy this from me for 50 cents a piece, and I'm only going to make 25 cents in profit, but they're going to buy way more footballs than I can sell myself to individual consumers. So I make it up in volume. Mm-hmm. And even though my profit margin as a percent of income will drop from 75% down to something much lower, the total dollars of profit may be bigger, and it may be worth it for the business to go after that. So you need to do the financial planning and analysis to understand how those results, what that really means for your bottom line.
Okay. So far we've talked about a number of different tools in the toolkit. We've talked about KPIs. We've talked about analysis by customer, client, or service line. We've talked about, pricing strategy, maybe a volume versus a margin. So let's talk about what types of tools are available out right now for your small and middle markets. Let's imagine that most of our clients use QuickBooks, because frankly they do. What tools, what technology, what platforms can they use? Is it just a million versions of Excel? What are you seeing out there that can help people in actually implementing some of these tools that we've talked about?
Fair question. So yeah, QuickBooks and Xero have some dashboard reporting built in that can show you your cash balance and your accounts receivable trend and things like that. But if you really want to get into analysis, you can't do that within those platforms. You can't even really do planning, like budgeting and forecasting, in those platforms. Those platforms can store your forecast, your budget. You can tell QuickBooks, this is how many dollars and cents I'm budgeting for each of the different categories, but the software itself doesn't help you come up with what those plans should be. So spreadsheets are definitely the FP&A analyst's best friend. They're really powerful tools to organize information and to quickly slice and dice it and summarize it into the ways that are meaningful. So that's the place to start. And it takes a lot of know-how to do it well and to do it efficiently in spreadsheets. But spreadsheets are prone to error. And if you're doing analytical processes on a regular basis, every month, every quarter, with the same type of data, then that becomes very time consuming. So there's platforms that are purpose built to streamline those processes. You can kind of configure the algorithm, take this result here, divide it by that over there, and average these things together and tell me what the answer is. Once you program that workflow, then you can have software that does it a lot more efficiently. So there's tons of solutions out there. Some of the easy ones for small businesses to go after, there's one called Fathom that's based out of Australia. They're in, I think, Melbourne is where they're founded. There's one called Reach Reporting that's based out of Utah in the United States. There's tons of others, but these platforms, these solutions aren't like a one-size-fits-all tool, and they're not plug and play. You can't just license the software and think, okay, now I'm going to get all the benefits of FP&A. You need to know how to use them. You need to know what your KPIs are that you're trying to track, and you need to configure the system to work for you.
So would you say a typical project, let's say, I'm a business owner, I've got an e-commerce company, I want to start tracking cost per click and the other KPIs. So if I want to do that today, the process might be, I identify a product, a platform like Fathom, and then maybe I would retain someone from your team to help implement the program, make sure it's evaluating the right KPIs, it's pulling the right data. And after, let's just say, a few months, I've got a recreatable, ongoing tool that can help me gauge the future and the results in 2023 and 2024.
Yeah. For e-commerce businesses, they typically use like Google Analytics or Tableau or Looker. There's a lot of data visualization software that has direct API connections to not just your QuickBooks results or Xero or NetSuite, but it can pull data in from Shopify and from Amazon and from all kinds of other data sources from your CRM software as well, and look at all the information together in context. Because, for a business that's very focused on sales, where you have like actual human beings doing business development or cold calling, a KPI that might be very relevant is what's the average sales revenue per salesperson on a given basis. And QuickBooks doesn't know how many salespeople you have, but your HR system does, or your CRM system does. And so you need to divide the revenue by the number of salespeople to get that average count. And you can tell how healthy the business is, and you can forecast growth once you know those KPIs. But yes, you need to start with the analysis so that you understand what it is that you're trying to report and track. And then you need to put a system in place to streamline the repetitive nature of that work. So it's an iterative process. Usually it starts in spreadsheets and then it migrates to a system.
Okay. So before we wrap up, I know you've got one great tip for all of our listeners that you want to share with, but before we get to that, I always like in the middle of a discussion to put the shop talk down for a second and just ask you tell us one thing about Mark Wald, the back of the business card. I always make this analogy of the front of the business card is the business stuff. It's the educational background, the skill set. The backside is the personal stuff. For me, as an example, I've got a young family. We love riding bikes and mountain biking and being out the door. So tell us one backside of the card thing about you, Mark.
Well, I also have a family, a wife, 2 kids, and a dog, and we love spending time outdoors. But something that's, I think, a little different about me, I paid my way through college making balloon animals for kids' birthday parties and tableside at restaurants. And I'm a visual spatial thinker. So twisting, different shapes in a balloon to connect it together and make a bicycle or a dog or whatever it is, it's not much different for me than putting numbers together in a spreadsheet. This connects to that. And when you do this, this happens, and then you get the result you're looking for. So that's the way my mind works. And it all started with making balloons.
And can you still make a dog or a sword or a hat like you could back in the day?
I still can, yeah. And I made full outfits for people. In fact, I've got a website. It started off as the website I used for my balloon twisting when I was in college. It's mwald.com. My first name, Mark, M, last name, W-A-L-D. So there's a little link at the bottom that has a few pictures of the balloons that I made when I was younger. But the website now talks about all my professional history, the way I think, and the businesses I'm involved in.
Oh, that's great. So to think about where we start our lives and where we end up and how the two relate. Maybe you've told me in the past, I didn't remember that you had a skill set in balloons, but that's fantastic. I love that. So let's share what's the one FP&A tip that you would just share with all, prospective clients, small and medium-sized business owners that may want to start doing this, don't know how. What's the one thing you would leave them with?
I'm going to go back to KPIs. Figure out what your most valuable KPIs are and start tracking them. You can't measure success and do something about it if you don't know where to start. And you can't, well, I said it already, you can't do something about it if you're not measuring it and evaluating your results. So everything builds from there. Start with your KPIs. If you need help, that's why I'm in business.
And so where can our listeners, viewers follow you? Where can they find you on social or on, maybe on the internet, or to track you down if they want to ask further questions or need help?
Thanks, Chris. mwald.com is a great place to start. From there, there's links out to the different businesses I'm involved in. You can also find me on LinkedIn.
Okay. And just the most important question of the day, can you be hired for balloon animal parties?
Not anymore, no.
Not
But
anymore. Yeah.
no, but if we, I, I guess I could have my arm twisted to make a balloon for fun.
Yeah.
I still do. There's some pictures on mwald.com. Check it out.
Okay. Well, Mark, thank you so much for being a guest on the Financial Bites podcast. It was great to talk to you, to hear about all this great information about FP&A and how we can help small and middle market companies out there do well and to be successful. So thank you again for being a guest.
Thank you, Chris. I really appreciate it.
Thank you.